Welcome back to Financial Therapy. It's not just about the money. I'm personal financial planner, columnist, and financial therapist Rick Kaler. Research tells us that 90% of all financial decisions are made emotionally, not logically. For nearly 4 decades, I've been helping people make better money decisions. So what makes my financial worldview different from most financial experts? I blend the nuts and bolts of financial advice with the emotions that drive making them. Good money decisions are not just about the money. So let's get started with today's episode. Welcome back to another edition. And I want to talk about something that's really been on my mind. It's been something I've been writing a lot about in my column. That is my weekly column, not the Advanced Wellbeing blog. That's kind of a synopsis of a podcast. And I've debated, does this belong on the podcast? How much financial therapy is this? And I have concluded, there is a lot of therapy principles involved in this topic. So hang with me a little bit. Of course, I'm going to be talking about the current financial climate and how that is affecting us both in our finances and in our emotions. And as I have said before, it is so hard not to be political these days because politics is invading what used to be just financial truth, financial facts. Now, I know even that statement is inflammatory, but it's really hard for me to debate a fact. And I'll give you the best example I know is a tariff. A tariff is a tax. And that's fighting words and inflammatory, but I don't know how you say it any other way. So I'm finding it difficult just in a similar fashion. We have politics invading community health. And these are things that didn't used to be political in the United States of America. And I don't know how we avoid talking about this in financial therapy, because I have clients all the time saying, Rick, what should I do? And I'm talking about financial therapy clients. How do I make sense of this? I'm scared. I'm really anxious over what's happening. And I want to be fair to say that there's also some of our clients that are not scared. They are happy. They're elated with what is going on based on the narratives that they believe to be true. So we're in this really weird situation where you can say about anything that has to do with finances or health, science, take your pick. And 40% of the country is going to be really happy with what you're saying. The other 40% of the country is going to be really upset, just looking at it completely opposite. And there's 20% in the middle that don't know what to believe. So that's a big preference that I use because it's just tricky. It's tricky for a financial therapist. At least it's tricky for me. Maybe not tricky for all financial therapists. As you know, I land in the Enneagram on type 1. And type 1 tend to think they know everything. They have a lot of judgment. They're very often right, but they can kind of go off charging down a path that maybe would be better served if they checked in with a 6 and took 10 deep breaths before they did. So I admit that parts of me are reactive. I have every anxious part that any of you do. And I really try to look at things from a as factual, balanced standpoint as I can. And of course I would, because that's also part of the one system, the one internal financial system, the one Enneagram system. So with all those caveats, I'll kind of dig in. The most recently we've been seeing this move toward government taking interests in and coercing businesses to give up portions of their revenue in exchange for licenses to markets, in exchange for grants. And this is something we've never seen in the U.S. We have 4 examples right now. We have U.S. Steel, we have NVIDIA, we have AMD, and we have Intel. And for example, recently the U.S. government had approved a number of grants for Intel, but failed to give them the money. And it turned out when they requested, I may not have everything here exactly right, but requested the money, and they were told that they would get the money if they gave up a 10% share of their company, which they did, and it now makes the U.S. government the largest shareholder of Intel. Now, this is unprecedented in the United States. And I also want to preface this, and I think I've said it before on the podcast, and some of you are going to cringe. I was a Republican for 47 years. So while I talk not like today's Republican, that has been my philosophical background. And I think most of you know that I used to be a very fundamentalist Christian, to the point that I consider that I was in a fundamentalist cult. I don't think I've talked a lot about that on the podcast. Maybe that's something for another day. So understand this. I am not a super progressive or coming from that standpoint. But today I think I think I'm a moderate. And that's a position that neither extreme likes, right? So I guess the old adage is if everybody is upset at you, that might mean that you're on the right path. So lately I've noticed that my own anxiety has been climbing as I read headlines, and it's just a flood daily of things that by themselves would be remarkable, concerning, unprecedented, but it's happening almost every day. So we're having tariffs imposed one week, lifted the next. At any one time, it's hard to know what the state of tariffs are. More recently, the tariffs have been added to any goods shipped to you under $800. There used to be an exemption from any country. How long will that last? I don't know. It's just a roller coaster environment, which makes planning rather difficult, right? When you don't know the landscape and the rug can be pulled out from under you at any time. Wars are dragging on without resolution. We got political gridlock in Congress that when we think it couldn't get worse, it continues to get worse. We have no idea what policy will look like next month or a year from now. And as I stated in the opening, now we have concerns about state capitalism. And I'll talk a little bit more about what state capitalism is. But my my internal nervous system just interprets all of this as danger. And I find myself just bracing for the worst. Okay, so with that backdrop, markets, the stock market in the United States is at all-time highs. What is up with that? Even I think back in, I'm going to say it was March, when we started talking about tariffs, and remember that the markets just dropped like crazy, and we went from 15% chance of recession to 60% chance. And based on everything I knew, I was in that camp saying, this is not going to end well. Well, at least in the short term, I was wrong. So here we are. Markets hitting new highs. I took a look at a client's portfolio the other day, and it was up close to 10% on the year. This is crazy. And a lot of people are asking, why isn't the stock market tanking with all of this bad news? What's going on? And this is kind of historical. Wall Street calls this the market climbing a wall of worry. That's where stocks rise in spite of, or perhaps because of, uncertainty. And that doesn't make it feel any less strange when the market's mood doesn't match the headlines. So to be technical, today's market euphoria may be more fueled by momentum, liquidity, the concentration of returns in a handful of large technology stocks. We can come up with all sorts of reasons. They could even be going up because there is some perception that state capitalism will be good. I don't think that I'll get into some proof on that. I don't think that has really ever been the case, not in the long term. But paying attention to the state capitalism move is a trend worth watching because it can shape your financial future. So let's clarify what state capitalism is and what it isn't. And here's where we can start to get into the emotional aspects of this. Because a lot of parts of ourselves will say state capitalism, that must be socialism. But state capitalism is not socialism. Socialism eliminates markets. Socialism has the state owning all of the businesses and controlling all of the production. Socialism is not profit-oriented at all. So state capitalism leaves the markets intact. The quote free markets, they're not free, but leaves them intact. But let's say the profit incentive, but overlays them with a significant government influence. So that part is socialistic, if you want to add that, and yet leaving the markets intact is capitalistic. And state capitalism, of course, is not capitalism. Capitalism is completely private. The state has nothing to do, the government has nothing to do with the running of companies. It's left to private enterprise. So maybe you can think of it putting this roaring economy that we've had, taking it from a well-designed racing bike and putting training wheels on it. You're still moving forward, but you're not going to go as fast, and the ride is going to feel wobblier. Here's what I mean. I did some research on this, and I wanted to see what are the returns in the last 10 years from a market that could be considered or is considered state capitalism, and say compared with the United States, that in the last 10 years has been void of state capitalism. And there's 4 countries I found that I think we can put into some category of state capitalism. That would be China, Norway, Singapore, and Saudi Arabia. So I compared those to the U.S. In the last 10 years, the U.S. has earned 12.5% a year. And the standard deviation, or the volatility, that's how much the markets can move above or below that return. And I'm sorry I'm getting technical here, but I'm talking money. And this it's important for us to know that the volatility is 16% a year in the United States market. So that means if the average is 12.5%, you could see a range of 16% above that, or 28.5. You could see a range 16% below that, or a minus 4.5. So that's the swing that you can expect is normal in producing that return of 12.5%. Norway, over the last 10 years, has done less than half of the U.S. at 5.9%, with higher swings. The volatility has been close to 22. Singapore has done just about half, 6.5% over the last 10 years, with a higher swing, 18.5%. Saudi Arabia has done just under 6%, again, less than half, with swings of 18.5% as well. Then you have China, which is the market that I most associate with state capitalism. Norway was actually kind of a surprise to me to find out that 37% of all their industries are owned by the government. But China was under 4%. So a quarter, almost a quarter of what the U.S. did, with a volatility of 24%, the highest of all. So boiling that all that down to plain English, the U.S. had a phenomenal return as compared to the countries that embrace state capitalism. None of these markets produced what the free enterprise market did. But here's the point I want to bring out. None of these markets went to zero. In fact, all of them had a positive return. And this is the part, the therapeutic part, that I want to stress. And I'm stressing this to my system as much as yours, that this does not mean the world's ending. This does not mean we're going to sink into recession. We will sink into a recession. We just don't know when. All economies do. But the price for state capitalism is lower returns, about half, and more anxiety, more swings. All right? And if we know that that is what we're going to be playing with, if we know instead of 12.5% returns, maybe we can expect 6% in the next 10 years with a volatility of, say, 50% higher. We can prepare ourselves for that, and we can make appropriate emotional moves. So I'm not suggesting that a person gets out of the United States or gets out of a state-controlled market. It makes sense to diversify in it. But here's what I'm stressing, is that a person carries an appropriate amount of risk in their portfolio. They're what is invested in their 401k in stocks, and it not be 100% in the U.S., that it would be closer to maybe 55% in the U.S. and the rest in other developed countries, preferably those that are not don't have a lot of state capitalism. Now, that doesn't mean you shouldn't have anything in China or anything in Norway, but they make up such a small percentage of the global market, that capital markets, that you can have that few percent represented in your investments. So the key is we've got to keep the headlines that U.S. takes 15% of NVIDIA's gross revenue, which that's before profit. The U.S. takes 10% of Intel. And we need those not to dictate certainly how we're investing or how we're feeling. It does not mean we need to get out. It does not mean that returns are going to go to zero. It means I need to pay attention to those parts of myself that are really concerned and getting very anxious, because we've never known this. As a country, we don't know what state capitalism is. And it's pretty easy for parts of ourselves to associate that with socialism. You hear this done by people with Europe all the time, where Europe has a lot of social democracy, which means they have high taxes and a pretty big safety net. But in many, many countries, you don't have state capitalism or state control of the companies. You just have really high taxes and a pretty big social net. That's not socialism, but it's confused all the time. So we need to check in with our parts and listen to their stories, listen to their beliefs, affirm the anxiety that they're carrying. Be curious about when they learned that this was socialism, or when they learned or went through a market crash, or whatever the story is, and to bring some compassion to that, and not try to should ourselves that we shouldn't be thinking that way, and not shame ourselves for feeling fear about wanting to get out. It's understandable with the money scripts. Makes perfect sense if we believe that money script, that this is socialism and the U.S. government's taking control of everything. That, if that were true, maybe we should be getting out. But it's not true. And giving the space to that part of ourselves to hold emotional reconsolidation, meaning here's what I believe, and here's, it might be true that this isn't socialism. It might be true that this doesn't mean companies will no longer be profitable or that the market's going to take a huge dive because of that. And integrating some facts like, other countries that embrace social capitalism, they don't do as good, but they still had some return. So that's my recommendation, is to sit with that, do your own research around it, reduce your U.S. stocks to 55%, put the other 45% into global markets, heavily weighted toward developed countries, and write out a investment policy statement. This is how I'm going to invest. These are the percentages I'm going to have. And when anxiety spikes, be with that part before acting on the anxiety, if at all possible, and revisit that written investment policy. And that can really help stabilize the anxiety. So the bottom line of all of this is this, that state influence doesn't end markets. It mutes them. It lowers returns. It raises volatility. But it's not the end of your investment portfolio. And this means the anxiety that you and I feel in our nervous systems is not irrational, right? History suggests that it's a pretty good mirror of how these markets are going to behave. Less return, higher volatility. And if we can understand that, and understand that our task as an investor isn't to predict, it's to understand, it's to notice parts inside of us that panic, those that need some new information, and that we need to respect them and lead them with clarity. The internal financial system. We want to be self-led in our decisions. So I'm hoping this information today is helpful to you, calming to you if you've been reading all of these headlines, following these headlines, and stabilizing so that you can have all of the parts step back that are so concerned and let you lead your finances in a self-led, objective, clear, confident manner. So thanks for tuning in, and I look forward to being with you again. Take care. Thanks for joining me, Rick Kaler, for another episode of Financial Therapy. It's not just about the money. This is where I combine the nuts and bolts of financial advice with the emotions that drive making them. Remember, every financial behavior, whether it appears illogical to you or others, makes perfect sense when we understand the underlying beliefs, feelings, and thoughts. Sign up for my weekly blog at financialawakenings.com. I hope you'll join me again for our next episode.